We've had another week of high gasoline prices, with the average cost across Canada sitting at around $2 per litre. What's happening with driver behaviour? Are we seeing a drop? A survey conducted by the Canadian Auto Association South Central Ontario said that 64% of people planning a road trip are changing their plans. They intend to either limit their trips or drive a shorter distance. Let's bring in Roger McKnight, Chief Petroleum Analyst at Enpro International. Roger, do you think that's true generally across the country? Will people be driving less?
I think they are. I think they're peeking over their shoulder to see what dark clouds are coming on the pump horizon. They're very, very sensitive to gasoline prices, and of course, it's very politically sensitive issue for federal and provincial governments and state governments north and south of the border. So it's an issue, and people, I think, are very alert to changes in pump prices and react accordingly.
Walk us across the country. What are drivers looking at in Western Canada?
Western Canada, actually the whole country, I'm looking at a drop for the next week or so, or the next week. Vancouver down 2 cents to $2.14, which may seem astronomical, but that's the way it is. Calgary down 3 to $1.89. They have a provincial road tax benefit there. Regina and Winnipeg down 3 and 4 respectively to $2.02 and $2.04. Toronto, Southern Ontario market going down 2 cents to $1.98. We've broached that magic $2 mark. Montreal down 3 to $2.07, and Halifax, or the Maritimes, I'm sorry, down 8 cents to 2.03. They're regulated prices, and there's a delay factor in when prices come down, but when they come down pretty hard.
Roger, this is a theme you've touched on. We keep hearing about it. Big margins in refining fuel these days.
That's the business to be in. I'm telling you, I looked at the refining margins since the start of the year, and these are the percent increases going from west to east. To Vancouver, they're up 34%. Calgary up 38%. Toronto up 68%, and the East and the Maritimes up 52%. Now, the refining margin is between the cost of crude and the wholesale price. These are absolutely amazing. Normally, you would see maybe you'd be lucky to get 18 to 22 cents a litre on a national average. This is ridiculous.
Why are the refining margins so high? Just remind us.
Well, I don't think the cost of crude is coming down. At least it's come down in the last couple of days, but that's not being passed on to the consumer. So the cost of crude is coming down, but your wholesale price, which is dictated across the border, not globally, it's really a Canada versus U.S. situation where the Canadian wholesale prices have to match what happens in the States. So prices in Canada aren't made in Canada. It's the 49th parallel does not exist when it comes to gasoline prices. So we're really being run by the U.S. market.
I'm trying to think about a company with big refining interests, Imperial Oil, Suncor, Cenovus. It kind of pays you, doesn't it, to keep your production down, but post huge profits on the refining. Sorry, go on.
Yeah, Valero is the market to watch because they're not in upstream. They're not really in midstream. They're strictly in downstream, which is refining and marketing. But that's just the way it goes. You got to watch that refining margin.